Hey, hello investors and future investors. Welcome to the channel. For today's video, I'm going to be going ahead to show you how to make money daily using the stock market. Now, this option strategy is going to cater particularly well if you're trading with a small accounts portfolio. So, if you're new to options or you're trying to use options in order to make some additional income in conjunction with your already 9 to 5, then you so happen to stumble onto the right video. Welcome to Investment Gains. Let's jump right into it. Welcome back, investors and future investors. My name is Tim, and on this channel, I show you how I use my portfolio in order to make consistent income. For today's video, I'm going to be showing you a strategy I use when I too was trading with a small account portfolio. I'm going to show you how to use this portfolio in order for you to make daily income. Now, it's of integral importance for you to watch this video through its entirety. I do not want you losing any amount of money. That being said, let's go ahead and get down and dirty with options. Now, our featured stock, or rather ETF for today, is going to be the Spider ETF, and that ticker is going to be SPY. Ideally, with this option strategy, it's going to work way better if you're using ETFs. So let's go ahead down to Trade SPY options in order for us to go ahead and open up the options chain. Now that we have the options chain open, this is this area down here. Now, before I go ahead and do a deep dive into this particular option strategy, I have two requirements for both my subscribers and also my viewers. Requirement number one: always make sure to do your own due diligence before investing. What might work for my portfolio, quite frankly, may not work for yours. The second requirement is going to be always make sure to have an exit strategy before entering any options trade. That way, if the trade do decide to go against you, then you know how to get out of the trade. I will be showing you an exit strategy with these strategies as well by the end of the video. So let's go ahead and get down and dirty. Now, to start off, this is what we're going to be doing. We're going to be going to sell. We're going to be going to put. We're going to be choosing an expiration date. The expiration date I'm going to be using is going to be July 14th, which gives us 4 days to expiration. Now, you can go ahead and go with the next expiration date, which is July 1st, but I want to show you how to get started first, and then you could go ahead and make your own decision. So we're going to be going with July 14th. Now, the other thing why this strategy is going to be perfect is because the ETFs, the majority of them, usually have daily expirations. So I'll show you how this is going to be important with this particular option strategy. So let's go ahead to July 14th, 4 days to expiration. Now, here's what we're going to do. We're going to go ahead and choose a strike price below the current share price, and the current share price right here is going to be 625.96. So we're going to go ahead and choose a price below that. The price I will be going with is going to be the 622 strike price. That's going to give me a chance of profit of 79%. Let's round it up to 80%. Now, how did I come up with the 622 strike price? Well, I'm glad you asked, and this is how I did it. So let's go ahead. We're going to jump into a new box right now. And now I want you to type this into any browser. I'm going to type in SPY expected move, and I'm going to type in SPY expected move for bar chart. You're going to go ahead, you're going to hit enter, and then you're going to be looking for this first one right here. As you can see here, SPY expected move for bar chart. Now that we have this open up, I'm going to go ahead, let it load, and I'm going to show you why I like to use this. Let's just get rid of these two freebies right here so you have a bigger visual. Now we're going to go ahead and scroll down so I can show you what I'm talking about. Now, what this particularly does is that bar chart gives you a brief summary of where the expected move should be on a particular date. So as you can see here, this column here says expiration date, and it has the entire expiration dates. Now, if you go all the way almost to the right, you're going to see we have something here. It's called lower price. So let me show you how to read this. By selecting the date we chose, which is July 14th, if I go all the way to the lower price, it's telling me that the expected move for the Spider ETF is going to be around 622 on the low end. And on the high end is going to be around 629. Now, this is merely just a guesstimate, and you could go ahead and use these in order to do some option strategies. So I decided to choose the 622 strike price on the low end because this is going to be a bullish option strategy. I will show you how to use the higher end price as the video goes along. So let's go ahead and get back to Robinhood. Now that we have the 622, we're going to go ahead, we're going to select that one. And this part of the option strategy, we're going to get paid because this is a sell option strategy. The amount we're going to be getting paid is going to be 92 cents or $92. Each option contract is multiplied by 100 shares because each option contract does contain 100 shares. Now we're going to go ahead, we're going to go to buy. We're going to maintain put and maintain the exact same strike date. And for simplicity's sake, we're going to go ahead and choose the next strike price right below our previous strike price. Our previous strike price was 622. We're going to go ahead and select the 621. Now, this one now is going to be a buy option. So now we're going to have to pay the difference between our sell option right here of 0.92 and our buy option right here. That's going to be income for you. So this is an income generating option strategy. This option strategy is known as the put credit spread. Let's go ahead to continue. Let's go to review order, and I'll give you a brief explanation of this. Now, the estimated credit you're going to be receiving once you do this option strategy is going to be $18.92. We're going to round it up to $19. In order for you to do this option strategy, you will have to leave a collateral. The collateral you're going to need to leave is going to be $100, which is going to give you a 19% return on your investment once the trade goes in your favor. Now, this is one trade on the 14th. Now, this is what you're going to do. All you're using now from your portfolio is just $100. Let's go ahead. We're going to clear these parameters. And then now we're going to go ahead and choose the next strike date. We're going to be going with the 15th. So now we have the 15th. We're going to go back to bar charts and we're going to see what's the expected move for the 15th on the low end. And that's around 621, as you can see right here. Let's go back to Robinhood. Remember, these expected move is merely a guideline. So let's go ahead. I'm going to choose my strike price once again below the current share price, and I will be going with the 621. Feel free to go with the 622 or feel free to go with the 620. Remember, it's just a guesstimate. So the 621 it is. Once again, I'm going to go to buy while maintaining put and maintain the exact same strike date, and I'll choose my strike price below my previous sell put. That's going to give me the 620. Let's go ahead. We're going to select that. We're going to hit continue. We're going to hit review. Now, once again, this is a second put credit spread. We have one for the 14th. Now we have one for the 15th. Now you could go ahead and keep doing this for 5 days out. So now you're going to have 5 credit spreads and you're only using $500 with your portfolio. Now, this is how you make money on a daily basis. What you want to do is that you want to close the one on the 14th whenever it meets your percentage goal. So for instance, the one on the 14th, let's say the 13th come by and you're up 75% on the trade, close the trade. Lock in your investment gains and continue. You're going to get back your $100. Then you could go ahead and open another put credit spread for the next week. Now, the next day, let's say the one that's expiring on July 15th, if that one once again has hit your criteria, you're going to go ahead, you're going to close that off again. So this way, you may be making, let's say, $15 on the 14th because you're going to close that off with a 75% gain. On the 15th, you're going to close that off again with a 75% gain, and so on and so on. And that is how you go ahead and make money on a daily basis. That's one option strategy I use personally while I was trying to grow a small account portfolio. Now, this works particularly well if you're bullish on the stock market because the put credit spread is a bullish option strategy. Now, I'm going to show you another option strategy if you bearish on the market. So let's go ahead, clear the parameters once again. So before we do that, we're going to go ahead and jump into bar chart. Okay, so here we are on bar chart and we're going to be focusing on the date of July 14th. Now on the upper end for July 14th, it says SPY expected move is going to be around the 629 price. We're going to go back to Robinhood and we're going to focus in on that price, but we're going to be changing up the strategy. So let's go to sell, let's go to call, and we're going to go in with the July 14th. Now we're going to look at the 629 price. So right here, you see the 629 price right here. It gives you around a 78% chance of profit. Let's go ahead. We're going to select that one. Now we're going to go ahead to buy while maintaining call and maintain the exact same strike date. And we're going to be choosing our strike price above our previous sell call. That's going to give us the 630. Let's go ahead. We're going to select that. We're going to hit continue. We're going to hit review order and voila. Now, this is the call credit spread. This is a bearish option strategy. So for those of you that are bearish on the stock market, feel free to explore this option strategy. Now, this option strategy is obviously going to be paying a lot more than the put credit spread. And the reason for that is because you're betting against the market. The market right now is in an uptrend. So by you being bearish on the market, you're going against the market. So if you're still bearish after what I just told you, then it's quite simple. All you need to do is just change your parameters. If it's me doing this, I would not go with the 629. In order for the trade to be increased in my favor, I'll just go a bit higher. It's that simple. So I'll probably go to the 631 or the 632. And that's just how you adjust it. Likewise, to the put credit spread, you're going to be getting income as soon as you do the trade. But you need to leave $100 as collateral. You're going to be going out the next day. You're going to be using the expiration date of July 15th and so forth and so forth. Rinse and repeat. Now, in order for you to stay winning with these option strategies, it's highly advisable that you close these trades before expiration date. These trades are known as option spreads. So always close your option spreads before expiration date. Choose a chance of profitability that works with your portfolio goals and go ahead and close them out. Now, a caution warning. Do not close these spreads on the same day that you open them. You will be caught with the PDT rule. The PDT rule, or the pattern day trade rules, says that you're not allowed to make more than 3 day trades within a particular calendar week. So go ahead and do some more research on that. Now, this is the option strategies that I use personally when I was growing a small account portfolio in order for me to start making money on a daily basis. The money is going to be small, but your percentage gain is going to be high. And once you do this consistently, you will start seeing the gains in your portfolio. Now, once again, remember, always make sure to do your own due diligence before investing. What might work for my portfolio may not work for yours. Now, for those of you that made it to the end of the video, you guys are the real investors and future investors. If you haven't already, go ahead and like the video, subscribe to the channel. The reason why I make these videos is that I'm trying to put as much free content out there in order for me to help people make money with options. So if you know anyone out there struggling to grow a small account portfolio, then the right thing to do is to go ahead and share this video with them. Let's try to help as many as we can get away from that 9 to 5. Now, until the next video, keep pushing your investments.